God bless everybody. Today it is March 14th of 2023 and we have seen a hot PPI number. This is Producer Price Index, which measures the pipeline costs of raw, intermediate, and finished goods jump 0.6% in a month, double what the Dow Jones estimates. And the Dow Jones and all the markets are down today due to this because they have a feeling, guess what? They're not going to be able to lower rates probably this year. And I'm going to say this up front. As we walk into these bonds, you might actually see the Fed has to raise rates before long because the 2-year bond is melting up. So anyway, let's get into these reports. Quick overview, guys. Look, the bonds control everything. They're 4 or 5 times larger than the stock market. I don't care if the stock market is still moving up. All indications out here says it's going to correct. It's going to correct hard when it does. So when you get a hot print of PPI, CPI, and inflationary numbers that are not coming down, and they can tell you all day long how this is deflationary and whatever, it's not. Everything is indicating that everything's moving up inflationarily, okay? You look at this melt up on the 2-year. I talked about this. Jay is following this. If this moves to 5, he's going to raise. It's just that simple. And the 10's moving up over that before long because it has to uninvert. This is bad. This is really bad for the markets. It's bad for the bonds. It's actually bad for the banks because what's happened is they bought all these bonds and now they're underwater already because the inversion is starting to, well, get worse again. So they're buying bonds down here that are worth less than what they are now. Just as they bought bonds down here and then they became worth less again up here. Look, markets go up and down. Okay? But sometimes they actually do crash, and you might end up here soon. And look at this 10-year rate, okay? The 10-year is what your loans are all built off of, okay? Look at that. It's almost gone up 1 full basis percentage point, 100 basis points, okay? You got to look at this. You got a 0.082% rise in this yield, okay? It's melting up. This is bad. This is making your 30-year loan go crazy, okay? We're going to show you this here in a sec. Same thing with the inversion, okay? Look, markets go up and down. It's just the way it works, okay? Right now, they're in a movement down on the immediate, and on the long term, they're on a trend up because this will come down and then it will go up. Again, it's going to uninvert here someday as it moves towards this line. You're at about a 0.4244 inversion right now, okay? It's moving back and forth, but it's compressing towards the upside here. And if it goes through resistance here, which is basically 0, then it's going to melt up because there won't be anything over here to really stop it, and it may peak back up and around in here again. That's bad, okay? So just realize all these things matter to you guys out here. The key take to this chart is once your inversion uninverts above this line, it breaks, okay? Because you have not had in the history of charting here for a long, well, never have you had an inversion that lasted this long. Okay, we're usually above the trend. We hit the base, support. In this case, it's coming down to support. It bounces off support and then it moves up. In this case, it's going to break through and then go up. Okay, bad sign for things to come. I just did a video, a couple days ago, Monday, Thursday. Your bond rates were like 7, or your mortgage, 30-year mortgage was at 7.4. Now it's at 7.1 or 516. It is moving up, okay? It's just the way this works, guys. And now everything that you have is getting more expensive when you refinance it, okay? It's just the way this works. So you've moved up a 1.2% just in a few days on the 30-year mortgage. This volatility is hitting all markets because people are trying to decide whether to stay in equities or get out of them, move to bonds or whatever they're going to do. But Bitcoin, look at that. If you bought in at 20,000 or 79,000 or whatever it hit at peak, let's see if we can figure out where that's at. Actually, I believe it went to 79. Let's go look real quick. So it went to 73, 835.57 on the high. That's up 193.34. But watch that number, because remember, you've gone down to 24,228.77, and actually if you go back into 22, you were down close to 15,000. I talked about that on a number of videos. This is a massive swing. If you do not know how to swing trade crypto and you do not know how to chart, you probably won't do well in this market. I'm telling you right now. So you've had a high, you're moving down, and so I want to show you something here. Okay, so you came down in this trench and then it popped up. Okay, so you've gone from approximately $40,000 to 73,000 or a little better. Okay, that is a huge parabolic shift in a short period of time. Okay, usually your retracement is approximately about 50% between the two. Okay, that would take you to 70 or 62.60, but your support line right now is approximately around in here. Okay, which is around 41.5. Okay, so that's what I keep saying. If this retraces and it falls through this support line, which is potential because the charts are looking like it could retrace tremendously, it usually retraces almost 50% at least, so that would take you to around 60. If it retraces completely, goes to 40. If it falls through the support line, then we're in trouble. You might see that happen soon. So getting into the FOMO right now of Bitcoin, unless you know what you're doing, or any of the cryptos, is probably not the best solution right now. Okay, now look at metals. Metals are reacting to the equity markets and the bond markets. Look at the pop you've had. Now, okay, it's down a little today. Okay, trend is over $2,000 since February 13th. You're now at 21.59. That's a good return, guys. I'm just saying. When you go to silver, it's a better return. Look at the pop on that. You're almost at 25. Actually, you went over $25 for a short period of time. If you'd have bought when I told you, and I'm not telling you to do anything. Look, this is one thing I need to address with this community. I am not dogmatic. I am passionate. I study this stuff constantly. I chart it out, and my analysis states that this is what's coming, okay? You can agree or disagree with this all day long, biblically and monetarily. I'm going to tell you right now, most of my stuff plays out within a short period of time after I state it. It may not be on the exact date. Wow, I'm missing stuff like, a couple days off, a week off. I mean, I'm not perfect in this world, but I can tell you what the trends are. All you got to do is watch the charts. But the biblical stuff's charted out too. And I'm taking a lot of damage on that right now, so I must be onto something. I'm just saying. I'm going to throw that one down all day long. So why are we reinflating? Why is inflation moving up? Because fuel's been moving up forever, okay, guys? Look at these charts. One day, you've gone up 1.43%. You're over $85 a barrel. Look, a few months ago, let's go to 6-month chart, you were down to 74 or less, okay? 73 something, so 73.24. You're up at 85.26. You go look at the fuel pump prices out there that you fill up every day your car. We're at 354, it's going to go up now. Fuel's moving up. Middle East is changing, which is also creating a higher dynamic for fuel to move up. And every time this moves up, it adds to your inflation of CPI, PPI, and overall core, which is not coming down. So when they're telling you this, everything's beautiful out here, they're lying to you. Look, if you look at the markets, they're laying people off everywhere. This is a real simple process. Go Google job cuts. Look at this stuff. John Lewis hits more job cuts. IBM lays off. UBS lays off. Metro Bank increases job cuts. UNA refuses to release information on their $27 million in job cuts. Shell plans to reduce 20% of their jobs. BNSF, job cuts have been circulating since February. Everybody's reducing people. Look, AI's come into this too, and that is reducing people's amount of hours because AI is reducing their workloads and they don't need them there anymore in this case. You can go for pages and pages and pages. Joey Biden, tell me where the economy looks good here. Okay? Where is it? I don't see it. You know, what's funny about this whole situation is your jobs that are being created are all governmental. Or, if you go look at the numbers, and I'm not going to bring up these charts, I'll have to go out and find them. The jobs that are being built are for people that aren't in this country, okay? They actually record this stuff. They're not Americans getting the jobs. Very few Americans actually are getting jobs at this point, and they're all either part-time jobs to fill that gap where they can't afford anything due to inflation, so they're getting 2 or 3 jobs, or they're bringing in all these illegals taking your jobs so that basically there is no jobs, and they can tell this all day long. The participation rate is terrible out here, so this is just really bad. So I had talked about Monday how the markets would react. Go back and look at the video. Everything I basically stated here happened. Took, 3 days for the markets to digest the news and information, and then you got a PPI informational news feed today which said that producer price index rose. Okay, that, look, people are not buying as much stuff. The prices to produce it cost more. People don't have discretionary money to just go out and buy anything anymore. They're buying food and trying to keep up with everything else. And so this is compressing margins. There's going to be a time where we watch some deflationary price reductions because they can't sell their products, but they're not going to buy any new inventory because they had an inventory problem a year or 2 ago. Okay, so they're liquidating inventory. Well, there's a point in time where you compress your margin, you sell off your inventory, you've lowered your price, or you've raised your price depending on the demand, but you run out of products, and then guess what? You've got to go out, rebuild the products, and then once you bring it back out, you have to charge more because the compression of all these numbers are on your margins. Okay, it's compressing your margins. That's why they're laying everybody off. They're restructuring their businesses so they can tolerate this and stay alive. And the last thing, I'll say this, the last thing as a business, when you went through a COVID, the last thing you're doing is reducing people out of your workforce because it's hard to find good people that know the job. So when you start to see the cuts, that means that their margins have compressed to the point where now they have to liquidate jobs, okay, to bring this back to normality so that they can survive out here. This number is bad. Jay's got a meeting coming up on the next Wednesday. He's going to be really hawkish in his tone, especially after both these prints and last month's prints came in hot. He's going to try to fudge it around and make it sound like they still have it under control. And the markets on especially Wednesday of next week are going to probably react tremendously to this information, because he's going to come out and he's going to have to probably not raise, stay where he is right now so he can watch this 2-year going into the next 1 or 2 rate decisions in the next few months, and then he may have to raise. If he raises, wow, the markets will go insane, and you will watch fallout and carnage right before, guess what, the 23rd, that date I've been talking about, and April 8th, which is an astrological nightmare out here. So, guys, you need to understand what's going on out here. That's crazy. That just popped up. SpaceX Starship notches major milestone by getting the ship up further than they ever did, but they just blew one up yesterday. They had a satellite trying to launch it. The whole thing just went up in smoke. It just blew up on them. Okay, so SpaceX isn't doing as great as everybody wants to tell them. Okay, I'm just saying. You know, the more and more you use these components, the more and more they run out, the more and more failures you're going to have, because you can't check all the components in these systems, and they do fail at times. So this one just blew up on the launching pad pretty much. It didn't go anywhere. So guess what? Your economy's getting ready to blow up just like it. So if you want to go out and watch that space launch with that satellite and how it blew up, you're probably going to see that by the end of this month, going into next month, because you're walking into a formation of a beast kingdom probably around April 20th, which I've shown you on the charts. God bless everybody. Protect yourselves out here, guys. Things getting stupid. Find that open door. Find Jesus. He's the only way through this process. God bless and have a great day.